What is going on, everyone? My name is Jeff. So I just published a stock analysis video on Beyond Meat the other night. Hopefully we can all learn a very valuable lesson from this experience, because I do stand corrected. I was coming into this earnings report expecting Beyond Meat to drop pretty big once EPS and revenue estimates were not quite met, and then guidance did not quite match how high this stock has run. And so I did mention that in that video the other night, that I have been keeping an eye on Beyond Meat to short it or buy put options against it. But I also mentioned that I was very unsure, and I ended up not making a trade on Beyond Meat. And like I said, just within that, I think there is a small lesson to learn. This is just another really good reminder. If you are unsure about a stock, you don't have earnings background, and you don't really have much of a trading history on a company, the best thing to do is just sit on the sidelines and wait, because Beyond Meat ran up $39.15 and it is up 85 more cents in after hours. And guys, I'm even hearing early estimates that this stock will be trading up to $200 very soon. So we're going to talk about why Beyond Meat ran up so high today. We're going to go through the earnings report, kind of look everything over. The real big thing here, guys, is demand, okay? Demand for the product, and all the early signs that they're giving us seem to be very bullish. And keep in mind, all the indexes were up massively today. So you know the drill, guys. Make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So I do want to emphasize this, the earnings report is really not that impressive. And at first glance, you would look at this and you would not be able to make sense of why the stock run up 40% today. But their quarter one non-GAAP EPS of minus 14 cents, they only beat by 1 cent. And then their revenue of $40.21 million, that beat by 1.28 million. So I'm going to compare Beyond Meat. It has a lot of similarities to the MJ market, okay? Because as of today, Beyond Meat has around an $8 billion market cap, and they're only producing revenue of around $41 million. So obviously the size of this company is not matching the amount of revenue they're producing, okay? The real story here, like I just mentioned a minute ago, guys, is demand and what this company can become in a short period of time. So their report did show sales growth of 215% in quarter one. Like I said though, just a little over $41 million. You know, I was initially very confused why the stock was running so hard. They had an adjusted EBITDA loss of $2.1 million, which was reported for the quarter, versus a minus $4.3 million a year ago. Doing research and analysis, there's no way we could have known that, because Beyond Meat was still private a year ago, okay? Now their gross profit was 26.8% of sales versus 16% a year ago. So obviously this company is growing, showing some upscaling. And again, this revenue guidance didn't really blow me away. You know, they expect for the year of 2019 revenue to be $210 million, for the adjusted EBITDA to break even. So like I said, the earnings report and the forward guidance, not really that impressive, and then yet somehow this stock runs over 40% today. And so this is why I want to compare Beyond Meat to the MJ market, maybe like Aurora Cannabis or Canopy Growth or Cron or Tilray, is that it's really not their numbers and really not their forward guidance that's eye-popping and is really impressing the people here in Wall Street. At this current valuation with this earnings report, Beyond Meat is very overvalued, but investors are pouring in like crazy because of the fast food chain potential, okay? So management stated on the company's post-earnings conference call that they continue to plan to primarily invest in current and additional manufacturing facilities, expand R&D, and invest in sales and marketing capabilities, which is pretty standard for any company that is new to the IPO market. Obviously, the CEOs and CFOs get put under massive amounts of pressure to grow the stock price, and that is also why a lot of companies choose not to go public, because it is just simply too much pressure. And they also mentioned that it doesn't see any obstacles in working with large fast food chains in the future, in what could be an interesting development for burger chains such as Shake Shack, McDonald's, Wendy's, and Sonic, okay? So I do want to point this out to you guys. Nothing has been carved in stone, okay? They haven't inked a deal with McDonald's or Sonic or Wendy's or any of these fast food restaurants. They just simply mentioned that there really is no roadblocks to stop them from entering into a partnership. And of course, they're going to have to expand massively to keep up with demand of these companies. On the temporary side, investors do feel there is a real opportunity to jump on this company while it's small, because as they expand, obviously the stock price and market cap are going to get much, much bigger, okay? I still think there is a short or a put option case here though. But I think right now this stock just has far too much momentum and it has far too much interest, and I don't want to touch it. Knock on wood, I am so happy I did not buy any put options against this earlier in the week, okay? So Jefferies, Credit Suisse, Goldman Sachs, and JP Morgan Chase have all raised their price targets on Beyond Meat after they listened to the company's earnings report and the positive vibe from the conference call. And what's ironic about this is most of the price targets are still far below where Beyond Meat is currently trading, and that is just due to simple valuation. Now, Credit Suisse come out and put a $125 price target, and this was shortly after earnings come out. Another thing that was mentioned in this article too, guys, inbound interest from restaurant chains has increased following the tremendous positive publicity during the Beyond Meat IPO. So A&W and Burger King restaurants have both reported strong overall same-store sales growth in the stores that tested plant-based meat products, okay? This is highly important because it means that the brand is driving some same-store foot traffic rather than just cannibalizing existing sales. So McDonald's and Kentucky Fried Chicken restaurants are likely to test plant-based meat products this year and giving their public comments. So this is a trend, is a very exciting trend where things could possibly be changing very, very soon. And Beyond Meat has the footing, and they've also IPO'd at the right time. That is really key here. So like I said, their valuations aren't matching their earnings report, but this whole thing is all about timing, okay? So as these restaurants start to transition into plant-based meat products, well, here comes a company that makes plant-based meat onto the IPO market, and now all of a sudden it is the most exciting thing on Wall Street to invest in, okay? I was taking kind of a bearish stance on Beyond Meat coming into this earnings report, but I am so very, very fortunate that I did not bet against them and did not buy put options against them, because here it says Beyond Meat short sellers lost more than $100 million on today's stock surge, okay? Now in a situation like this, if you were short on the company, all I can hope and do is that you've covered well before this stock run up as high as it did. And then obviously if you bought put options against Beyond Meat, you probably just lost all the value of your put options. So a lot less risk involved with put options. But if you were short and you continued to hold short today, you are probably feeling some pain in your portfolio right now. So, you know, lesson learned without feeling any real pain in my portfolio. Like I said, I just simply did not make a trade, and that comes from my level of experience. I did not know enough about this company. I didn't have any earnings background to look at, and so I was very unsure, and I don't feel safe putting money on something I'm unsure about. I don't mind taking a loss on a stock after I've researched it a lot and maybe just called it wrong or market conditions kind of changed. I don't have a problem taking a loss in those types of situations, but just a wild, out of left field trade, if I take a loss there, I would really beat myself up a lot about that. So that pretty much wraps it up, guys. What we have here, we have a company that did have a pretty decent earnings report, but the numbers weren't eye-popping. What it really is, the reason the stock is up for over 40% today is because this is a plant-based meat producer, and pretty much all of the fast food chains are buzzing about switching to plant-based meats, you know, over the course of the next year or two. And so a lot of experimental things are going to come, and this is where all of investors' interests are falling. Like I said, I still feel like this stock is very, very overvalued for the moment. But if they do land a deal with a McDonald's, a Wendy's, a Sonic, a company like that, you could probably see the revenues jump up very, very fast. And I think that's the mindset behind this early investing, is that you want to try to get on this stock while it's cheap. Once this stock starts trading up, you know, who knows, this could be at $300, $400, $500 a share in a year or two. So anyways, drop your thoughts and comments down in the comment section, guys. I would really enjoy and appreciate hearing that. Let me know, have any of you bought stock in Beyond Meat, or did anybody go short and get burnt today? Share your story in comments with me. And thank you as always for watching the video, and have a great day.